Welcome, everyone. It's great to see a large number of participants again today for our second session of the Future of Finance series by the International Institute for Sustainable Development and the China Council for International Cooperation on Environment and Development. Today, we are diving into nature-based infrastructure as an asset class. If you were here yesterday, you would have seen that we covered some trends, and now we're doing a bit more of a deep dive, getting into the details. So I'm really looking forward to the discussion today. My name is Kaylee Taylor, and I am a policy advisor here at the International Institute for Sustainable Development, focused on community building and sustainable finance and SDGs, Sustainable Development Goals. I will be guiding you through the presentation today. Just a very quick plug that we do have another session happening in this Future of Finance series tomorrow, same time, same place, on gender lens investing. So if you're interested in that topic, please feel free to join us. You can also follow us on Twitter at Future of Finance hashtag and add to the conversation there. And I'll also just mention that this is a Building Bridges community event. Building Bridges is a movement focused on engaging the community in more sustainable finance for the SDGs, based here in Switzerland, but focusing on this at a global level. We have an incredible panel of speakers for you this morning. I will quickly introduce them. We have Lisbeth Cassier, who is a senior policy advisor here at IISD, who knows all things infrastructure. Martin Berg, who is the head of natural capital impact strategy at the HSBC Pollination Climate Asset Management. Margaret Kulo, who is the finance practice lead for WWF, and she is also one of the conservation finance experts for the China Council. So we thank you for your participation there, Margaret. And Michael Urban, Dr. Michael Urban, who is a senior sustainability analyst at Lombard ODA. And pass this over to our first speaker, Lisbeth Cassier, who is going to really set the scene for us and help us to understand what is nature-based infrastructure and talk a little bit about a roadmap for turning it to an asset class. So Lisbeth, I'm going to stop sharing and pass it over to you. And thank you very much.
Thank you very much, Kaylee. As Kelly mentioned, I think it's important we do a little bit of setting of the scene of what are we actually talking about when we speak about nature-based infrastructure. Nature-based infrastructure is a term that really is being used interchangeably and will certainly do so for the purpose of our discussion here today with nature-based solutions, sometimes also spoken about as nature-based engineering with nature, green infrastructure, natural infrastructure. It's important for the discussion today that we're also able to use those terms somewhat interchangeably. But what we're really talking about is nature-based infrastructure that refers to deliberately planned and managed natural ecosystems and working landscapes that generate value for society. A wide range of benefits, as what I'll be speaking about a little bit later today. And maybe the easiest is to actually point at a couple of examples. We speak about nature-based infrastructure at IISD as on the one hand, being natural ecosystems, really looking at nature such as wetlands, mangrove areas that provide for a whole range of environmental, economic, and societal benefits. But we also include hybrid infrastructure in the discussion. Think about in urban areas where we see green roofs, green walls that provide all kinds of benefits to cities and benefits to citizens. That certainly is also part of what we are talking about today. Now, what are some of those benefits and what is it that we actually might be looking at to value nature-based infrastructure in a holistic or integrated way? First of all, nature-based infrastructure, nature-based solutions arise in our discussions about climate adaptation and building future resilience for our societies against the impacts of climate change, but also against other systemic shocks, such as the pandemic that we know today. such systemic shocks to our societies and economies are often also caused by environmental degradation. And nature-based solutions give us an opportunity to actually restore some of the environmental degradation done, while at the same time enhancing societal benefits as well as economic ones. So here on the screen, you see a couple of examples of what it is that nature-based infrastructure actually provides us with. At IISD, we look at nature-based infrastructure really from the infrastructure perspective first and foremost. So it is an infrastructure type or an asset that provides us with multiple infrastructure services. When we think about climate adaptation, the benefits are there that nature-based infrastructure actually protects us against extreme weather events, rising temperatures, and sea level changes, something that otherwise gray infrastructure or built infrastructure would provide us with. So nature-based infrastructure provides us a substitution in certain cases for gray infrastructure. But it is also a nature-based solution that increases and that can increase the efficiency of gray infrastructure. For example, green roofs, as what I mentioned before, it actually reduces, for example, the energy cost of buildings, and therefore also provides us with financial and economic benefits. Nature-based infrastructure provides us also with a whole range of health and well-being benefits that aren't always captured when we look at the value of nature-based infrastructure as such, but is certainly part of what we should be discussing today. How do we actually value, and how do we quantify, and how do we monetize those health and well-being benefits that green infrastructure, nature-based infrastructure brings us? I'm thinking not only in terms of avoided health costs because green roofs provide us with a cooling effect in cities, but they also have a positive impact on air pollution. Green spaces are proven to have a positive impact on mental health, and therefore enormously reduce health costs for governments, for example. So again, it's that whole range of benefits that we should be talking about. We should be talking about more. And I think one of the important factors that we'll be discussing today is then, if nature-based infrastructure brings this whole wide range of benefits, why aren't we seeing more of it? What are some of those barriers to scaling up the use of nature-based infrastructure? And in our work, what we've come across and have also tried to start working towards addressing are three main barriers, and the list surely is not exhaustive here, but the first one is the lack of the predictability on the performance of nature-based infrastructure. And on the one hand, this refers to what I would call the biophysical performance. Thus, mangrove restoration really performs as well as building a flood wall to protect cities from flooding. Those kind of questions we need to be able to answer if we really get an increasingly amount of stakeholders to trust the performance of that nature-based infrastructure. But it also translates itself, of course, into how's the financial performance of nature-based infrastructure? Do we have sufficient evidence that it performs better financially? And if yes, how can we make that feasible? And how can we ensure that some of those benefits that nature-based infrastructure bring can actually be captured by those different stakeholders involved? There is a lack of comparability with the gray built infrastructure, which is what in a way links also to the previous point. But this really is because we have a knowledge base that's not sufficiently integrated and that is not sufficiently present for the different stakeholders involved in deploying nature-based infrastructure, not for governments, not for investors, not for local governments, who are often really those who deploy and need to give the pushes for nature-based infrastructure. And the third point is the issue of the lack of identification, but also the recognition of revenue streams that nature-based infrastructure can generate. And I believe this is something we'll certainly touch upon later in the discussion. So as a result, nature-based infrastructure today still has a very nascent track record. And as a result, there is a lower level of predictability, comparability. And so there is not that kind of certainty for governments and for investors to actually move forward with nature-based infrastructure. Now, thankfully, this is about to change, is what we believe. And there are solutions to this. Some of which we've captured under the name and the umbrella of an action plan, and things that we would like to do at IISD, but in collaboration with others, to actually start looking at some of those barriers. And the first point here is that we really need more systemic, integrated, and rigorous assessments on those values of nature-based infrastructure that help us to improve the knowledge base. So this means, on the one hand, providing financial valuation of nature-based infrastructure, comparing to the performance of built alternatives. It also means to support the design of innovative financing strategies, solutions, and governance mechanisms that help to address the risks and uncertainties around nature-based infrastructure. And it also means to generate and record the environmental, social, and governance-specific data on nature-based infrastructure. And this is something that IISD will be working towards in collaboration with the Global Environment Facility, UNIDO, and the MAVA Foundation to really improve that knowledge base. Now, secondly, it's also important, and this is an opportunity, I think, for many of us in this field, to improve cross-sectoral stakeholder collaboration. As I mentioned, some of the benefits of nature-based infrastructure might be for different types of stakeholders. In agroforestry projects, for example, we know that farmers are a huge beneficiary of nature-based infrastructure, but it's also important that they're involved in the conversation on how to recognize actually additional revenue streams if they plant agroforestry projects on their fields. So it's very important that we enable collaboration with different groups of stakeholders, ranging from farmers to urban planners and architects, but also engineers who sit within government. And traditionally, we look at grey built infrastructure as the default option. And then thirdly, there are certainly also regulatory challenges in the infrastructure environment. Building codes, do they sufficiently enable nature-based solutions to be integrated in built infrastructure solutions? And do we get nature-based infrastructure sufficiently into the infrastructure regulatory space outside of the traditional climate adaptation and biodiversity dialogues? So it's also important that we see regulatory changes happening there. I'm going to stop there. There's a lot more to be said, but I'm really looking forward to the discussion and hearing from our panelists. Thank you.
Thank you. Thank you so much, Lisbeth. And I think that provided a really, really strong basis of understanding of what nature-based infrastructure is, what the challenges are, and where we can potentially go, which is the perfect way to open up into a panel discussion. And so from here on out, you're just going to be hearing from the speakers, no more slides. We're going to dive into a discussion from our experts who've been working in this space for quite some time and are advancing real solutions. So first, I'm going to turn to Martin, and the way this structure is going to be structured is we're just going to do quick opening comments and then we'll have time for discussion. So don't forget about that Q&A function if there's things that are coming up for you that you'd like our panel to discuss. So Martin, turning to you, HSBC Global Asset Management and Pollination have partnered to create this, what I understand to be the world's largest dedicated natural capital asset management company, which to me sounds like an exciting collaboration and something that is potentially quite groundbreaking. So I'm very curious, what does this look like practically? Was there a demand from investors for this type of initiative? And what initial projects and types of investments are you focusing on? So I pass it over to you for those comments. Thanks, Martin.
Thank you very much, and thanks for inviting me. Yes, maybe we start a little bit, but who we are. So then the new company, this new asset management company, is called HSBC Pollination Climate Asset Management. So that's quite a mouthful. So we're kind of rebranding ourselves as Climate Asset Management. And what we are is, as you said, we are a joint venture between HSBC Global Asset Management, and I think that really needs an introduction, and Pollination. Maybe for those that don't know Pollination, Pollination is an investment advisory firm, globally active. the idea is to have one company that with kind of a mission statement to reach net zero, and both from the advisory and the investment side, Pollination is trying this through different means. So Pollination has always, well, I can say I actually joined from the European Investment Bank last year, initially to Pollination. And the discussion we had was a lot, how can we mainstream natural capital? And perhaps one of the things I should say, we see maybe nature-based infrastructure a little bit broader. We call it natural capital. We can maybe also discuss a little bit later on where kind of the distinction is. But one of the things we always felt was that this is a topic, this is ripe for mainstreaming. So how can we get this in front of larger investors? And that's really the discussion that Pollination and HSBC had, and the result in the end is HSBC Pollination. It's a joint venture, new asset management firm, really focused on bringing out, developing investment products, real asset investment products for institutional investors at scale. And we do believe that this is something that doesn't exist at the moment in this market. We do see a lot of smaller investment vehicles, opportunities, also sometimes fund managers that are focused on natural capital. We do see very large fund managers working on more traditional ways, how nature is investor investment products, for example, forestry funds or agriculture funds. But what we don't see is to really, at the moment at least, something scalable where large-scale institutional investors can actually follow this new investment theme or asset class is saying, I want to actually combine those things, and I want to have something which is scalable, but that not only is an investment product in traditional means, but really also tries to focus on impacts, and impacts from two ways. On the one hand side, really to measure the impact, ensure that there is a positive outcome of the projects that are being financed, but then also to turn that impact, and this was already alluding to, this is really the challenge, turn those impacts also into a revenue stream. In our views, this is really what's needed in order to make this work, in order to make this asset class or investment be attractive for institutional investors. So just in short, we were formed in September. We are now working through the regulatory aspects, and we're hopefully very soon there, and having the discussions on our first strategy with institutional investors, which is really a strategy that is focused on bringing natural capital through the institutional space. And in a way, we see it, the way we see natural capital is really also very broadly. So we do think that any nature-related investment is part of the strategy. As I said, we are focusing on real asset. That means we are really focusing on investments on the ground. So ultimately, what we want to find is either projects in the agriculture space, in the forestry space, or landscape related, as was discussed earlier, or a combination of them. What we see as the real interesting part of the strategy is that a lot of the natural capital projects are a combination of forestry, of agriculture, changing landscapes, and then bringing in additional revenue streams through the natural capital. So the vision that we are having is really that what we want to do is we want to change landscapes. That's really for us the important part. So whatever project we are financing, we'll do a measurement upfront to see what impacts can be achieved, maybe agriculture, maybe forestry, maybe other natural capital projects, that the landscape projects, or maybe in the like on the blue side, and then we will actually only invest if we believe there is a positive impact on the ground, and that's very important to us. And so, but at the same time, we really also want to provide institutional investors with the clear understanding how revenues can be achieved. And so that's what is at the heart of our strategy, that we're saying. So the majority, like we're saying, we want to change landscape. For us, that means we have to control the landscapes. That means we will invest in the land with the view to change it, to change practices. So for example, in agriculture side, to change from more traditional forms of agriculture to regenerative or other sustainable agricultural forms, and then really to achieve a return by basically improving things. And that is really, in our view, attractive also from an investment perspective, because what we see that when one changes the investment horizon from a more short-term oriented to a longer-term horizon, and when it's possible to actually do changes on the ground, then actually that also leads to a better financial result, or not only impacts on the ground. So we do this in forest, we do this in agriculture. In forestry, we always look for opportunities to really combine these, to embed nature conservation in the timberland projects. And then also we look for projects that derive most of the revenues from what we call payment for ecosystem services. And as a whole, what we really try to provide is a strategy that where institutional investors have access to a variety of revenue streams. Some are very traditional and known. So there's a land value. We improve the situation on the land. So a part of the revenues will be the increased land value. The other one is the yield related to agriculture and forestry. But then also, and this is really where we think that this is interesting and exciting for institutional investors, there's also a potential upside from carbon, biodiversity, from integrating some of those revenue streams. And then some projects, as said, maybe a combination of them, or they involve also some ecotourism, and they can have other environmental attributes, maybe related more to water. So we put this as a package together as a large-scale investment product. We're discussing this with investors, and I think it resonates in our discussion. It resonates really well with many of the investors. I think there are lots of institutional investors that are saying, I know I have to do more now on climate, and this theme is one of the big pieces of the puzzle to solve the climate problem. So that's one. They also see nature as an upcoming theme, and they're all worried about the underlying risks in portfolios and supply chains that are not being tackled. And they're also looking, a lot of them are saying, I also would like to invest something that actually has an ability to appreciate in value if more regulation in this area comes in. And this is really what this strategy allows. But it also allows, and that's what we're really excited about, it really allows to give some case studies, and at least we alluded to that. Some of the revenue streams that we will tackle, they're not tested at the moment, but by blending them with more traditional revenue streams and have some of them more as an upside potential, this is really an interesting opportunity for the institutional investors to learn, and then also to have a positive financial outcome if regulatory changes or also some consumer behaviors are changing and more sustainable products are required. So I'll leave it here for the moment. I'm looking forward to the discussion.
Perfect. Thanks so much, Martin. I think that provided a really good understanding of what you're trying to do. And I think, you know, as you were saying, you and Lisbeth are speaking from a similar song sheet in this needing to build the track record. And as you said, the approach you're taking is creating that blending that allows for reaching these big institutional investors who maybe don't know the space as well. So I think that's super interesting. Thank you so much for that intervention. Now we're going to turn to Margaret from the WWF. And, you know, from a perspective of a NGO, a very renowned nature-based institution, how are you seeing that we can make these nature-based solutions investable? And what are the latest innovative solutions that you have seen that address this revenue stream problem of nature-based solutions and nature-based infrastructure? So Margaret, over to you.
Thanks a lot, Kaylee. Great to be here. I really appreciated in particular Lisbeth's context setting at the top, because some of those points she brought out, this lack of predictability and performance, lack of comparability, lack of evidence, and recognition of the revenue streams is really important. And I'm especially excited to talk about nature-based infrastructure as an asset class. Together with IISD, we published a report back in November of 2017 on biodiversity and infrastructure. And at the time, we were trying to provide initial policy guidance for parties to consider before the then 14th, I believe, Conference of the Parties for the Biodiversity Convention, which was happening in Egypt. In the report, we used the term together, nature-based infrastructure. And I think it's really been encouraging to see that concept gain traction over the last several years, to the point where we now have organizations like Martin's with HSBC pollination, coming together to look at how to further develop this asset class. So how do we make nature-based infrastructure or nature-based solutions investable? I think maybe obviously we need to be able to quantify the capital and operating costs as well as the benefits and see how it performs compared to gray infrastructure alternatives. And obviously, Lisbeth already talked about that. This is important because green and nature-based infrastructure often has a different cost structure than gray. And the benefits also need to be carefully evaluated to ensure proper economic analysis. Job creation, I would start with. It's a relatively straightforward place to start. It's critical, especially today, given the very real economic challenges we face globally as a result of the economic slowdown from our efforts to tamp down on the spread of the COVID virus. Job benefits of traditional infrastructure are well understood, and they're perhaps what we less appreciate is the significant job benefit potential to investing in nature as part of the economic recovery. Last year, just recently, we did a report, WWF, with the International Labor Organization called Nature Hires. We found there are about 1.2 billion jobs in sectors like farming, fisheries, forestry, and tourism. And inclusion of nature-based solutions like afforestation or mangrove restoration and stimulus packages can be a really job-intensive way to come back and also at the same time increase resilience to climate impacts, which we know are coming in force. What can complicate the proper examination of costs and benefits, I think, in this space is what we call co-benefits. So engineered solutions generally provide a single benefit. They can also cause environmental damage that creates other costs, many of which are not included in cost-benefit analysis. And they require continued maintenance and eventual replacement. In contrast, nature-based solutions provide the primary benefit. They often require less maintenance over time because they rely on the regenerative processes of nature, and they provide a range of co-benefits. So just to use a simple example, a levee or a firewall, a flood wall can provide a single benefit. It can impact river flood plain ecosystems in a negative manner. Some of those costs are not included frequently. They also require considerable long-term maintenance. And in fact, in much of the developed world right now, we face a significant challenge in a long backlog of maintenance work on levees. By contrast, a nature-based solution for flood management can reduce flood risk while improving water quality, nutrient sequestration, biodiversity, and open space, and they often require less maintenance over time. So those kinds of co-benefits can be difficult to measure, but they certainly are measurable, and we need to do, as a community, a much better job of doing that. Well-protected managed forests and wetlands can enhance the performance and lifespan of existing engineered infrastructure as well. I've got an example right here near where I live, which I have spent a lot of time in the last year when I'm not traveling. Like many of you, I'm sure, use nature to get out of the house. There's a place near where we live where a formerly big concrete sort of channel for floodwaters was replaced with an extensive system of nature-based flood management. And not only do we get better flood management now, we get a lot of capture of sort of waste overflows that come with significant rains. So now that doesn't go down our stream and into the Chesapeake Bay. And we also get birds. I take my son there frequently to go visit our great blue heron. This is a hard benefit to quantify, but certainly in the context of civil infrastructure planning, something that public entities really need to give a lot of consideration to. So I think we need to look at getting better at measuring those revenue streams and measuring the co-benefits and making sure that those, especially the ones that are relatively easy to value and monetize, like reduction of upfront capital investment, reduced operation and maintenance costs, resilience benefits and the related avoided costs savings, and the co-benefits of improved livelihoods and positive health impacts, like Lisbeth also mentioned, are really critical to getting these investments to not only get off the ground, but also scale, as Martin mentioned.
Perfect. Thank you so much for that. I also like the very personal examples because I think we all can relate to that. Nature does play such an important part in our lives, but that is hard to quantify in a financial sense. So I like this. What I'm hearing, again, another red thread is this shift in thinking that's required, and of course, the evidence we need to back that up. And as Margaret said, the co-benefits particularly. So thank you so much for that. I'm now going to turn to Dr. Michael Urban from Lombard ODA. Lombard ODA just recently announced this 400 million capital fund, and it's also a founding partner of the Natural Capital Investment Alliance. So I'm very curious why this huge interest in natural capital from Lombard ODA. I also know that there's this broader strategy at LO called CLIck, Circular, Lean, Inclusive, and Clean. How do you see natural capital playing into that overall strategy? And are you facing any challenges in implementing this quite ambitious plan? So Michael, over to you.
Thank you. Thank you, Callie, and thank you so much to the organizers for inviting Lombard ODA to join this conversation on this really fundamentally important topic. For those of you that know us, Lombard ODA is a global wealth and asset manager. Over the years, we've really come to think increasingly deeply about sustainability, and essentially came to the conclusion that sustainability is a foundational driver of returns. And as such, it ought to be embedded in our entire range of products and services. Now, let me start by sort of explaining why at Lombard ODA we believe sustainability, and more specifically natural capital, are really worth our collective attention. So in a world of low growth and low interest rates, we believe that more than ever, investors need to focus on long-term secular trends and structural themes. Perhaps the most important structural trend is the necessary decoupling of our global economic model to its environmental and its social footprint. And this decoupling, we think, is not just an aspiration, it is very much in motion and accelerating. Now, the recipe for this decoupling is a transition away from an economic model that has run wild. Wild is for us an acronym that we use to describe an economy that is wasteful, idle, lopsided, and dirty. And we believe we have started transitioning from this wild economic model towards what we call a click economic model. So you were referring to it, Callie. So this really stands for this idea of circular, lean, inclusive, and clean. And two of our recent product launches, Climate Transition, as well as our Natural Capital Fund in the listed equity space, really lie at the heart of this transition. And in fact, our Natural Capital Fund is highly complementary to our Climate Transition Fund. Indeed, the circular bioeconomy and the net zero economy are mutually reinforcing. And this is something that has already been stressed by previous speakers, and I think is really important to discuss. Essentially, to achieve a net zero economy, we must transition to a more bio-aligned economy. Now, for many sectors, this transition is in fact a revolution. While it is disruptive for a number of incumbent players, it also presents fantastic growth opportunities for companies that are working on aligning their business models as well as their business practices with our natural environment. So bioplastics, biochemicals, smart farming, forestry, regenerative agriculture, as well as 3D printing are all growing fast, while their traditional counterparts are at best flattening out. The natural capital strategy is a high conviction portfolio, which is targeting specifically these growth opportunities that both harness as well as preserve the power of nature. So the fund consists of global listed small and mid-cap companies that exhibit a large degree of purity to the natural capital investment theme. And we can come back to this concept in the Q&A if that's of interest, perhaps also to reflect on some of the challenges that we see in this space. The fund was launched on the 16th of November 2020 and has already over $500 million of assets under management. We're extremely grateful to benefit from the patronage of His Royal Highness, the Prince of Wales, who established the Natural Capital Investment Alliance, which we are one of the founding members, together with HSBC Pollination Climate Asset Management, as well as Mirova, an affiliate of Natixis Investment Manager. Now, I think at this point, it'd be useful to take a moment to put this natural capital investment theme into perspective. So by natural capital, we mean all the resources of nature, including the air we breathe, soils, minerals, water, land, and species. Now, not all of these resources are renewable, but those that tend to be hugely productive. And yet we are within this wild economic model, overexploiting the non-renewable resources of nature while also underutilizing the renewable ones. Today, only 9% of resources that we use are recycled, and we extract a huge amount of materials every year. By some calculations, this amounts to about 92 billion tons, which represents about half the total weight of Mount Everest. Quite spectacularly wasteful. If you think about the agricultural industry, which is a $5 trillion industry, it of course depends on rapidly degrading soils, just as the forestry industry is seeing its most valuable assets shrinking at a very rapid pace. And so overall, about half of our global GDP is reliant on natural capital. Now, unfortunately, present levels of raw material usage and consequences of human and economic activity are unsustainable and contribute to ecosystem degradation. Resulting issues like water stress, chemical pollution create substantial economic as well as social and environmental damage across all levels of human life. So with these facts in mind, we believe it is vital to find a way to preserve natural capital by allowing it to regenerate whilst harnessing its powers. And so we're looking at these two areas in our natural capital fund as effectively sources of investment opportunity. So within our CLIC framework, we have identified 4 revolutions that we think are key to our natural capital strategy, namely the circular bioeconomy, resource efficiency, eco-awareness, and zero waste. Now, the best way to think of these revolutions is through, I think, a quite nice metaphor of butterflies' metamorphosis. So firstly, if you think about a hungry caterpillar that travels in a linear fashion while eating away at nature's resources, this basically stands for our current resource-intensive economy that is still very much linear and based on this take, make, waste model that we think is clearly no longer sustainable. Now, just as the caterpillar transforms into this beautiful butterfly with 2 wings, our economy is also transitioning to this CLIC model, which supports nature and a bio-friendly economy. Now, for those of you that might be entomologically minded, you might already know that rather than flapping their wings up and down like birds, butterflies actually contract their bodies, making a slanted figure 8 pattern with their wings. And so if we take this first wing of this butterfly with this circular motion, it really stands for the circular bioeconomy. This first revolution is vital to include in a natural capital strategy. And in fact, we believe a focus on the circular bioeconomy effectively differentiates us from other public market strategies, which tend to only look at circularity, but don't include nature and therefore miss out on the opportunity sets related to harnessing the regenerative power of nature. The other wing of the butterfly represents leaner forms of industry. Simply put, we need to do more with less in order to preserve nature. And this can be achieved through an outcome-oriented economy that focuses on resource efficiency as well as zero waste. Now, by the outcome-oriented economy, we need more conscious consumption as well as lifestyle changes from consumers, such as switching away from meat-based diets or focus on cutting packaging and plastic waste. And zero waste is really about closing the loop of the industrial circle to make sure that we recycle, repair, or reuse what is still too often wasted. So as a result of our thematic approach, our natural capital fund has a global universe of about 500 small to mid-cap companies which exhibit a high degree of purity to these 4 revolutions. And the fund is constructed of a high conviction selection of about 40 to 50 names selected from within this universe. But I'll stop here. Thank you for your attention and really look forward to the discussion. Hand over back to you, Callie. Thank you.
Thank you so much, Michael, for that. That was provided a really nice metaphor, as you said, and I think also really pointed at that systemic nature of these systems and how connected everything is. You know, we can't look at climate and nature and industry as all separate things. These are all very related, and goes back also to Margaret's point about co-benefits affecting in one space will have co-benefits across others. So we have so many great questions in the Q&A, and we don't have very much time. So here's what I'm going to do. I have 3 questions off the top of my head, and I'm going to direct them at people. So the first one, I'll kind of give the overview so people don't feel like their questions are getting missed. So the first one I'm going to direct to is Lisbeth. And this is, people are asking about what financial instruments can be used for nature-based infrastructure or that you are seeing. So if we could get a little more granular about the instruments, that would be perfect. And then I'm going to turn over to Martin because there's a lot of very specific questions about the approach. So one of them is your thesis evaluating direct investments or indirect investments or both? And there's another question regarding when you're doing that kind of impact assessment to decide who you're going to be investing or where you're going to be putting your money. There was a question about how you're ensuring, since you're so focused on landscapes, that you're not displacing vulnerable people or affecting vulnerable communities. So that's going to go to Martin. And then I'm going to come back to Margaret and Michael for some of the philosophical questions in the chat. There's a lot around this. And this is generally the question around monetizing values and benefits of nature. Is this the approach we should be taking? Putting price tags on things? Is there an ethical dilemma here? So that's the order. So first, Lisbeth, instruments, Martin, some HSBC and pollination specific questions, and then back to Margaret and Michael for some philosophical ones. So Lisbeth, over to you.
Thank you, Kelly, and thank you for to the audience for all those great questions indeed. On the financing instruments, actually the first thing to do and to look at again is where are different revenue streams in relation to MBI projects coming from, and what does that mean for finding finance for those projects. Realistically, what we have seen in looking into research into the innovative finance instruments for MBI is that most MBI projects still have a large share of public funding and have a lot of grants, public grants going to the deployment of those projects. And the reason is that the projects in and of themselves are simply often too risky for the private sector to come in at this point. And so what's important moving forward for financing structures of MBI projects is to really determine and enable a discussion on who should and can carry best which risk in relation to the MBI projects. And today, I think the solutions that we see out there are combinations of public and some private funding, philanthropic funding that goes to nature-based solutions as well. Public funding from all kinds of levels, I would say. We see in Europe a lot of grants are being deployed by the European Commission as research and innovation grants to increase that knowledge base on what are, in the first place, the key performance indicators that we should be looking at when it comes to nature-based infrastructure. What is it that we need to know to grasp that holistic value? How and just by means of example, how much when we look at reed beds or wetlands, how much nitrogen and phosphorus is being removed that actually avoids us required investment in wastewater treatments? How much carbon is being removed or stored in vegetation and soil per unit area, per unit of time when we restore a mangrove? those are questions that we don't have sufficient information on, which makes the question on the financing strategies difficult. Now, where we've seen some innovation popping up is, of course, in the area of carbon credits and offset schemes, where we see those projects starting, but in all honesty, it's also not where the massive amount of finance for MBI lies. And these projects are also very complex to set up. Now, I do believe that once we have much better information on what the expected performance is of nature-based solutions, we will also be much more able to quantify what are the energy savings, what are health expenditure savings, what are flood mitigation savings, and how can they be transferred into contractual arrangements. And we've seen in the area of built infrastructure and energy efficiency that the performance-based contractual models are helping to generate financing for energy efficiency savings. Can we replicate those models in the area of nature-based solutions? That will require us to get that knowledge on the performance, and then I think we will see examples popping up. But I think today we're looking at a mix of public and private financing and all sorts of arrangements that we'll see increasing moving forward.
Awesome. Thanks for that, Lisbeth. Martin, over to you for the HSBC specific questions.
Yeah, thank you very much. Maybe if I can just chime in on the last question. So I said I'm joined from the European Investment Bank, and we were running the Natural Capital Finance Facility. What we've seen is, especially when we're talking about nature-based infrastructures, yes, the public sector is really important, but not only because they're providing grants, because I think the public sector has a great opportunity to do a cost-benefit analysis and actually then price in or assess some of the additional benefits and take this into the decision. And I think some of the most successful projects that the NCFF and the EIB has done was actually in exactly in that area. For example, in Athens, there's a nice case study which you will find on their website on how this is integrated into a wider infrastructure program for the city of Athens, and green infrastructure is used in particular for resilience and cooling. And I think those are nice examples, because they're the cost benefit analysis. It's easier to actually, on the public side, it's much easier to do that than let's say from the private sector, where you have to create a revenue stream from that. It's a slightly different way. But if you have to do some measures anyway, you have to upgrade some infrastructure, I think is a really good opportunity on the public side. On the specific questions for us, so yes, we are trying to be direct as much as possible. So we really want to invest in the underlying projects. Then the other question on controlling land is obviously also a challenge, in particular in emerging and developing countries. For our first strategy, we focused on developed markets, so mostly on North America, Europe, Australia, New Zealand. In Europe, this is also an issue, but this is really clear. I would say in the US, New Zealand, Australia, it's probably a little bit easier to actually buy the land, and it's more the common practice. This is part of our impact approach. This type of assessment, it's an important part of the overall assessment. But I think it's fair to say that this is if you look at the barriers or the challenges of nature-based solutions, in particular when you go to emerging developing countries, that's obviously one of the challenges that has to be overcome when doing that. I see a few more questions. Maybe I can kind of chime in a bit in the philosophical question, right? Should we put a price on nature?
Yes, but just 1 minute, because
one minute. I'm just saying, one question was directed to us whether it always requires regulation, and I would say obviously regulation, or now the looming regulation, is a huge driver for this. It would be easier, but I think we see a lot of voluntary action that has actually opened up new revenue streams, also as Lisbeth has said, which I think is really good. And then the other thing is, I think more and more, for example, with regenerative techniques, and Margaret has mentioned this, I think more and more there are also indirect savings. So for example, less fertilizer leads actually to higher revenues because less input is required. And I think that's once this is understood, this is also a huge driver. It's more an indirect revenue stream, but it's really helpful to demonstrate the attractiveness of these options. But I'll leave it here.
Perfect. Thanks, Martin. Margaret, over to you. 2 minutes if you can.
Great, thanks. And just quickly, also on the instruments, the sovereign green bonds have been a great boon for investment in nature. And I believe every single one of the sovereign green bonds that have been issued to date have included significant funds for investment in things like natural park systems, which is hard otherwise to get a financial model around so-called. So great new instrument developing, and standards around that too are strong. I think on the controversy, ethical question around putting a price on nature, I think effectively as a species ourselves, what we have done is put a price on nature of zero in the way that we have treated it. We need to change that and recognize the value of nature. I think it's more about recognizing the value than putting a price on, and that's from biodiversity and the value of the diversity of the plant and animal life around us, and also the services that that plant and animal life around us provides, like soil quality gives us food, bees and other pollinators also give us flowers, give us food, and we can't continue to treat those as if the value is zero because we put a price of zero. So it's clarifying that distinction between what the price is versus what the value is that we derive from, and that nature gives us, because we're part of this whole big system.
That was beautifully put. Thanks, Margaret. Michael, over to you, 2 minutes, and feel free to respond to any of the questions that have been asked.
Thank you. I mean, I'll second what's been just said, really. I think the valuation question is really addressing this problem of putting a value of zero on nature, and that's something that needs to be addressed. What I'll add to that is I think there's something to be said about the fact that this is a collective challenge, preserving and harnessing nature. And there's a language question, right? So we have to think about, when we think about different actors that can address this particular challenge, and we think of investors, consumers, policymakers, if we think specifically about the question of investment, the language of putting a monetary value on preserving and harnessing nature is absolutely foundational to direct capital flows. So there's something there that I think is very important. And then on the policy side, which is important as well, there's of course the question of finding this common language and common goals, which we very much hope that COP15 and Kunming in China can actually deliver something that's akin to a Paris Agreement for nature, and that is also something that we very much need. And finally, perhaps something on already unfolding regulation. The EU Commission has its taxonomy. And interestingly, at the moment, it only tackles climate mitigation and adaptation, but future iteration of the taxonomy should include the protection of water and marine resources, circularity, as well as the protection and restoration of biodiversity and ecosystems. And this is something I'm very curious to see how it will be formalized when the time comes.
Thank you so much for that. I really appreciate all your comments. I think you've given such a very detailed picture in such a short period of time. I mean, this is very much a rapid fire, and really have helped me as someone who didn't know that much about nature-based infrastructure to understand it, and therefore I'm sure the audience as well, which is why I very quickly want to turn it over to the audience to ask, what is one word that describes what you're taking away from this session? And as you're typing that in so that we can kind of see what was salient for you, let me just say that for me, I think one of the things that I really saw in this session is this shift in thinking that's required, but also the participation that's required from all different types of actors. Understanding that we need that knowledge base, but also that there will need to be maybe public capital coming in, and we need investors who are creating the bridge for those big institutional pots of money to get into this space. For me, I think that was very, very interesting. There's a kind of a role to play for everyone, and that to me says, just how important it is that we collaborate together on this. And I really liked that point about that Margaret made at the end there around that effectively we put a value of 0 on nature, and that needs to change. And while, I think many of us have discomfort with thinking about nature in terms of money, it does need to be valued for all the things it provides and all the co-benefits that are there. So there we go, intrinsic value coming in strong in the word cloud. So thank you all so much for this. Please feel free to keep adding these, because we can put this in the final blog post to show what everyone was taking away from this. And I will just use this opportunity before I close to remind you that we have the Gender Lens session tomorrow. And it's the same time, 1 o'clock Central Eastern European time. And this will be the final in the series. We will be summarizing in blog posts. We'll also be trying to cover as many questions as we can in the blog posts as well. And we'll also be circulating all of these videos. So my very final thing is just to thank our experts so much for their fantastic inputs. Like I said, we covered a ton of ground in 1 hour, and I really took a lot away from this, and I think I speak on behalf of the audience who was so engaged in saying that they did as well. So thank you again for joining IISD and the China Council, and we will see many of you tomorrow. Thanks, everyone.